Welcome back to Books and Backbone. I'm Donna Harris, CEO of Bookkeeping Made Simple, your host. And today I'm going to tell you something that might be a little uncomfortable. If you got a big tax refund this year, I'm not going to tell you congratulations. I know that's not what you want to hear. The refund feels good. Feels like found money. Feels like the government did you a favor. And I understand that feeling completely. But I've been doing this for 25 or more years, maybe more by now. And there's a conversation I've had more times than I can count with business owners that got a 5,000 or 8,000 or 12,000 or more refund and thought they won, where I had to gently explain that they really didn't win anything. And that's what today's episode's about. And I promise by the end of it, you're going to think about your taxes differently. So let me start with the definition, not the feeling, the actual definition. One, a tax return is the document you send to the Internal Revenue Service. A tax refund is your own money being returned to you. That's it. That's the whole thing. At some point during the year, either through quarterly estimated tax payments, through withholding, or whatever mechanism applies in your situation, you paid more to the IRS than you actually owed. And at the end of the year, when you filed your return, they calculated what you actually owed, compared it to what you paid, and sent you back the difference. It's not a bonus. It's not a windfall. It's not the government being generous with you. It's a return of an overpayment, money that was yours the whole time, that sat with the IRS from the moment you paid it until the moment they sent it back. Now, for a W-2 employee, this is an inconvenience. They don't have a lot of control over their withholding. They set it at the beginning of the year and they live with it. But for a business owner, and this is where it gets important, you choose how much you pay in estimated taxes every quarter, which means if you're consistently getting a large refund, you're consistently making a choice to overpay, usually without realizing it's a choice at all. So here's where I want you to do a little math with me. Let's say you got an $8,000 refund this year, which means at some point during the year, maybe in quarterly payments, maybe in a combination of things, you paid $8,000 more to the IRS than you owed. And that payment probably happened in some form between January and September. Let's call it an average of 6 months before you filed and you got the money back. So for 6 months, you had that $8,000 sitting with the IRS instead of in your business. What could $8,000 have done in your business for 6 months? Could have covered payroll in a slow month. It could have paid down a high interest credit card, one of those cards charging you 22+% interest, while you're essentially lending the government your money for free. It could have been the working capital that let you take over a contract that you had to pass on because cash was tight. It could have gone into equipment, into marketing, into hiring, and instead it sat with the IRS, earning nothing, helping nobody. And I know what you're thinking. You're thinking, but Donna, $8,000 isn't going to change my life. Well, maybe, maybe not, but I've been in this business long enough to know that when business owners who are most stressed about cash flow are almost always the ones overpaying their taxes by several $1,000s a year and not connecting the dots. Now, I want to be clear about something because I can already hear half of you thinking, okay, fine, I'll just underpay. Don't do that either. Underpayment penalties are real. A surprise tax bill in April when you weren't expecting it, especially a large one, is its own kind of financial crisis. It forces bad decisions. It puts money on credit cards that shouldn't be on credit cards. It creates stress that ripples through the rest of the spring when you should be focused on your business. Both outcomes, the big refund and the surprise bill, have the same root cause, and that's not knowing your number before you owe it. The business owner who gets a big refund every year isn't winning. The business owner who gets surprised by a big bill in April, actually March, isn't unlucky. Both of them are making decisions without information they could have had. The goal isn't a refund. The goal isn't a surprise bill. The goal is accuracy, knowing before each quarterly payment exactly what you're going to owe based on what your business has actually earned. So let me explain what that looks like in practice. As I think a lot of business owners know, they're supposed to make quarterly estimated payments. They usually refer to it as quarterly tax returns, and they have a vague sense of what to pay, and some just kind of pick a number and hope for the best. That's not a plan. That's a guess. Quarterly tax planning, real quarterly tax planning, is a conversation that happens before each estimated payment is due. In that conversation, someone looks at your year-to-date financials and calculates what you're actually on track to owe for the year. Not based on last year, not based on a percentage someone told you once, based on what your business has actually earned and spent in the current year. And then we calculate exactly what your payment should be for that quarter to keep you on track, not to overpay, not to underpay, but to land as close as possible to exactly what you owe. Quarter one's payment is due April 15th. Quarter two's payment's due June 15th. Quarter three is due September 15th. Quarter four is due January 15th of the following year. 4 conversations, 4 calculations, no surprises. That's the system. It's not complicated, but it requires 2 things a lot of business owners don't have. 1, books that are current, and 2, someone who looks at them before the payments due. Here's the thing about quarterly tax planning that most people don't realize. You cannot calculate an accurate estimated payment from books that aren't current. If your books are 3 months or more behind, which is far more common than you might think, you don't actually know what your business has earned year to date. You have a guess. And a quarterly payment based on a guess is just a more structured version of the same problem. The businesses that get surprised by their tax bills are almost always the businesses whose books are behind. And because the signal, not the noise, the signal, the number that would have told you what was coming was sitting in the books waiting to be read and nobody was reading it. Clean books aren't about compliance. Really, they're not. They're not just about having something to hand over to your CPA in April or March. They're the thing that makes it possible to run your business with actual information instead of just grief and hope. The quarterly tax conversation is one of the clearest examples of that. When your books are current, we can calculate your estimated payment to within a reasonable margin. It's not going to be perfect. When they're not, we're guessing. And you don't want to guess about this. I want to leave you with a reframe. Most business owners think of tax season as the time of year when they find out what they owe. The bill arrives, they pay it. Or the refund arrives and they celebrate. What if instead tax season was just the confirmation of something you already knew? What if you walked in filing your individual return in April already knowing, not guessing, knowing what your tax picture was going to look like? What if the number on the return wasn't a surprise in either direction because you've been tracking it all year? That's not a fantasy. That's what quarterly tax planning actually produces. And the business owners I work with who've been doing this a few years tell me the same thing every time. The thing they value the most isn't even the money they save. It's the absence of dread. No more white knuckling until taxes are due. No more hoping the refund's big enough to cover whatever crisis is brewing in the spring. No more surprise bills that put March on a credit card. Just a number you already knew, confirmed by a return you were already ready for. That's the goal. Not a big refund, not a surprise bill, just knowing your number. Q3 estimated taxes are due September 15th, which means right now, today is exactly the right time to have this conversation. If you don't know what your year-to-date number looks like, if you're not sure what your payment should be, if you got a big refund last year and you're starting to wonder whether you've been overpaying, let's talk. You can find me at mysimplebookkeeping.com. You can schedule an appointment at mysimplebookkeeping.com/contact. The consultation is free for now. That may change. And the clarity of knowing your numbers well and ahead of the September 15th deadline is worth considerably more than whatever it was you were planning to do with that refund. I'm Donna Harris. This is Books and Backbone. Thanks for listening. And if you found this valuable, if this episode made you look at last year's refund a little differently, please like, share, and subscribe. Hit that red notification bell if you're on YouTube, and share this with a business owner who maybe is still celebrating theirs. They need to hear this.